Hello, everyone. This is Terry with Futures.io, and as always, I would like to thank you for joining us today. It is my pleasure to welcome back Chris Kaiser from ABC Trading Group for today's webinar, The Next Steps in Mastering TradeStation Programming. Throughout the webinar, if you have a question, please feel free to type them into the questions box, and we'll do our best to answer them at the end of the event. The webinar will be recorded and posted on the Futures.io website within 24 to 48 hours. If you're watching this afterwards on YouTube, please do us a favor and give us a thumbs up if you enjoy the webinar. And as always, please feel free to share, comment, subscribe to our channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @Futures.io. And now, without further delay, I'll hand it over to Chris, and you will get the pop-up to share your screen.
Okay, thank you for the introduction, Terry. You should now see my screen.
Yep, looks good.
And I would also like to thank you and Mike for inviting me and hosting the webinar today, and all of you guys attending. As Terry introduced, my name is Chris Kaiser, and it is my pleasure to take the next steps in mastering TradeStation programming with you today. You might know me from Futures.io, where I go by the username ABCTG. I usually reply to easy language questions. The username is an acronym for my website, abctradinggroup.com, which is where I can be reached besides Futures.io. And I'm located in Hamburg, Germany. And you can see a small image here from the harbor side with our new concert hall, Elbphilharmonie, in the background. I'm a software developer and a long-term TradeStation and Easy Language user. And as that, I'm a registered Easy Language specialist with TradeStation. But I do work with other platforms like Multicharts, multicharts.net, or NinjaTrader, to name a few. And my business is programming and consulting for my clients based on their requirements and needs. And I'm not in the market of selling indicators or strategies or any trading education either. I prepared a couple of examples today to show specific behavior of Easy Language and TradeStation. And this is just meant for demonstrational purposes and is not or should not be considered a trading advice. With that, let's take a look at today's topic. In this brief webinar, we will deal with some more of the basics, but we also build on what we learned in the first steps in mastering TradeStation programming webinar, which we did with Futures.io almost or more than 1.5 years ago, but you can rewatch it on YouTube. We will stick to a legacy Easy Language for now, simply because it's easier for learning the basics. And once you have a solid foundation, you can easily expand to more complex concepts from there. And with this way, most of the webinar will be applicable to multicharts too. We will start with elements of control flow. We already dealt with some in the first webinar, namely the if-then, else begin conditional branching. And today we will take a look at loops. Usually TradeStation code is executed from top to the bottom, but when you enter a loop, the code within the loop gets executed repeatedly before TradeStation then will continue after the loop. So this is a great way to repeatedly execute certain code blocks, and this can really help make your life easier as a coder. Next, we will take a look at how to enter and exit trades, how you can keep track of fills and other performance-related metrics. And finally, we'll take a look at what assumptions TradeStation makes when it comes to evaluating historical performance of strategies, and how you can raise the accuracy there. And the last topic for today will be what is referred to as max bars back, which tends to cause, especially new users, a lot of headache, since it can cause multiple issues like not seeing any trades for your strategy or only on a fraction of the available data. It can cause TradeStation to issue warning messages. And it can also be the cause for differences between what you see visually on a chart by your indicators and the exits and entries you see from a strategy that is applied to the same chart. So we'll take a look what max bars back actually is, what it affects, and why this is important. And with that, let's take a look, or let's start with taking a look at loops and how they can help making your coding life easier. A loop is an iteration statement, basically, that repeatedly executes one or more code expressions, which are known as the loop body, until a controlling expression is no longer true. Examples where you might have already used a loop, unbeknownst to you, would be, for example, a simple moving average that uses a for loop to step through the last X number of bars and sum the price values for those bars to then compute the simple moving average out of this summation. And today we'll take a look at two different loops. The first one will be the for loop, the second will be the while loop. And when working with loops, there are two reserved words that can help you control how the loop is processed. One is the break reserved word that allows you to terminate the loop that is currently executed. And the continue reserved word allows you to skip the current iteration. I understand that this sounds very technical, but we'll go over some examples now that will surely help clarifying loops. And we'll begin with the for loop. You see easy language code here on the left. And this is a code snippet that would compute a simple moving average. And on the right, you see a flow chart of how the for loop is evaluated. A for loop has two parts. And the for loop in this code here spans from line 11 to line 14. It ends with a semicolon, and it has two parts, basically. One is a header, where you specify an iteration. You specify the starting value of your iteration and the ending value of your iteration. And then you have the loop body, which is then executed with every iteration step. So the reserved word for will always be followed by a variable name, then the starting point of the range and the ending point of the range. And finally, within the begin-end section, you can add one or more statements that will get executed with every iteration. This numerical variable here called counter in line 11 will be automatically incremented by the loop code in case you use the reserved word to here, or as we'll see in a minute, you can also use another reserved word called down to, which would then allow you to decrement this counter variable with every iteration. So you don't have to take care of that incrementing or decrementing yourself. This is done by you, done for you by the for loop. And since in this example, the counter variable gets incremented with every iteration after the loop body is evaluated, you can use this to back reference previous bars values of the close in this example to sum the closing prices of the last length number of bars within a variable, and after the loop, you'd simply divide the variable which at that moment still holds the summation, divided by the length to get a simple moving average calculation result here. When you look at the flowchart, how is the for loop exactly evaluated? You start with the initialization statement. Then, before the loop body is executed the first time, the code will already test if we are still within the range. Unless you specify a range here, for example, if you say if for counter equals length to length -1, you would already be past your ending value of the range and the loop code would never be executed. But in this example, where we specified a lower starting point, the test condition would be true in the beginning, the loop body would get executed, and then after the loop body is executed once, the expression, in this case the counter variable, is incremented, and the loop code starts over with testing the condition again. If it's still true, the loop body would get evaluated again, and so on, until at some point this test condition evaluates to false. This happens with a default input here of 10. After the 10th iteration, since we start at 0 and go to length -1, when counter is 9, we would add the value of the close from 10 bars ago, because 0 would be the current bar. So 9 is the bar 9 bars to the left of the current bar. After the loop body is executed the last time, counter would be incremented to 10. And in that case, the test condition evaluates to false. The loop ends, and TradeStation would continue to execute the code past line 14. The alternative version using down to is very similar. The difference is that you specify a higher starting point from which you go down to. So in the example of computing a simple moving average, you start with the bar furthest out and then come closer to the current bar. And another difference in this example here is just showing that you can write line 13 a bit more concise by using the addition assignment operator, which will achieve the same as saying V average equals V average plus close square brackets counter. A typical use case for for loops is when the number of iterations is known before entering the loop. So a moving average is a good example here. And in case you don't know the number of iterations up front, or since the for loop increments or decrements the counter variable with a step size of 1 always, and sometimes you might require a different step size. In that case, you can use the while loop. I'm using, again, the example of computing a simple moving average, just because this way the differences will probably become a bit clearer. And in a while loop, the loop body will be executed repeatedly while a Boolean, meaning true, false condition or check evaluates to true. When you look at the flowchart on the right, it looks quite similar, but one difference is there. After the loop body is executed, the while loop does not take care of updating your test expression or your counter. So you will have to make sure as a coder that at some point the test condition will become false. Otherwise, if the test condition never becomes false, you would have created what is referred to as an infinite loop. And this is simply a loop that would run, as the name suggests, until infinity. And this can cause TradeStation to either raise a warning message in the good case scenario, or in a worst case scenario, this can even crash the platform. So what you can do, or what can you do to prevent yourself against that? One way is to make sure that at some point the test condition will evaluate to false. And in this example, I did this by using a counter variable myself that I incremented within the loop body. So it got incremented with every iteration, as you can see in line 16. And at some point, counter reaches a value that is equal or greater to whatever we set as length. And at that moment, the loop would end and a TradeStation would continue after line 17. Another example, or another way that I like to use to prevent myself against infinite loops, is by using the break statement. So especially during the development, when you might have missed a special case where the test condition did not evaluate to false, then you have some protection in the form of the break statement. And you can do this by using a counter variable that gets incremented with every iteration. And at some point, when the loop iterated or was executed for a lot of times, in this example, just more than 10,000 times, then would print that information to the Easy Language print log. So I get some visual that indicates that I need to take a look at the code to check if something went wrong. And I'd call the break statement to exit and terminate the loop immediately. So when the break statement is encountered within a loop, the loop would be exited immediately. It would not end the current iteration. So from the break statement, it would immediately go to the end of the loop and continue after the loop without further evaluating anything after the break statement within the loop. Use cases for where you would use a while loop could be when you have a collection with volume and price information and want to compute the value area. You know the total volume, you know how much volume would have to be within the value area, and then you can use a while loop to step through your price collection and sum up the value until you've met or surpassed the desired volume for the value area. Another example could be to use the while loop for a trading stop, where every time the current market price is above the next trading stop update price, you would move the stop higher. And in case of a gap, for example, you don't know the exact number of times that the trading stop could be moved higher. And you could design a while loop to simply update the trailing stop while the close is still above the next trading update. So with every iteration, you would also move the next trading update step one higher. And this way, it would not matter how many times or how wide the gap is, the trading stop would move up correctly. But before we can deal with exiting trades, we need to know how to enter a trade in the first place. And this is where TradeStation's or Easy Language's order actions and order types come into play for strategy orders. The actual order statements within Easy Language are close to regular English. As you can see in the second line here, this would issue a short entry for 200 shares, and it would issue a market entry order. And the entry order follows a sort of pattern or specific pattern. It always starts with the order verb, and TradeStation provides you with two order verbs for the entries. One is buy for a long entry, and sell short, or in 2 words, sell short, in case you want to issue a short entry. After the order verb, you have the ability to specify an optional order name within parentheses and quotes. And it's usually good practice to name your orders, because this name will also be displayed on the chart, so you can easily see which order led to an entry. After the order name, you can specify an optional size using the reserved words shares or contracts, which are synonymously used across all instruments. So TradeStation is not particular here about you using contracts to enter a position in the stock. And if you don't specify a size, then whatever is set as default size in the strategy properties is used by TradeStation automatically. And after the size, the order action and a semicolon would follow. And the order actions are always start with next bar, and then an optional skip word that you can add, which is add, an optional skip word that you can add to provide an even more English-like expression. And then you have the option of 3 different actions. One is a market entry, one is a stop entry, and one is a limit entry. And for the latter 2, you would specify a price. Sometimes you see a 4th option or action, which is this bar on close. And this will, in a backtest, show the entry at the close of the bar. However, this is not a market on close order in real time. This order would also get issued at the end of the bar, and the fill would be around the open of the next bar. So this can give you a wrong impression between real time and backtest behavior. These entry orders cannot scale out of position. So if you are short and issue a buy, the short will be closed first automatically, and then TradeStation would issue the buy. So you would see 2 orders on the chart. You can, however, use those entry orders to add to existing positions. And the standard behavior is that orders get evaluated at the end of the bar and then get issued for the next bar. But TradeStation also provides you with intra-bar order generation. And when you enable this, the syntax is still exactly the same, and TradeStation will understand from the context it asked if you have intra-bar order generation enabled. That next bar in this case refers to the next tick. If you don't want to reverse the position, TradeStation provides you with a specific reserved word and a similar syntax for the exits. Again, very English-like. You have similar syntax. You start with the order verb. Notice that the exit orders that are only there to exit trade, so they will not put you in a position, are different than the entry order verbs. So you have sell to exit a long position, and buy to cover, or in 3 words, buy to cover to close out short entries. Again, you can specify an optional order name. Then there is a difference because you can tie an exit to a specific to a specific entry by specifying or using the words from entry and in parentheses the name of that entry that you want to tie this exit to. So if you tie an exit to an entry specifically, this exit will only be applied to that entry and to no other entries. And then you also have the ability to specify the size, or you can use all contracts like I did in the example above. And TradeStation's default behavior is that an exit would be applied to any entry. So that means if you are if two entries are currently open on that chart and you issue an exit, this exit would close out the specified size from every entry. And in case you don't want that, but only want to exit or close out a total of the specified size from all entries, then you can use the total reserved word. And I'll show you some examples for that in a minute that will make this clear. And the order actions are exactly the same as you have for the entry orders. The shortest in terms of words order statement is probably this one, buy next by market, omitting name, size, and any optional skip words. This would issue a market entry order, use the default size as specified in the strategy properties, and it would also use the default entry order name for long entry, which is buy. In case you name your entry, the name would appear as this on the chart. So when you use a certain condition and have multiple different entries in your code, you can immediately see which condition led to which entry. And you'll notice also that TradeStation displays below the entry name the size that you are currently holding on that chart after the entry is filled. Issuing short entry orders is similar. You just use the appropriate order verb. And in this case, we issue a limit order at the end of this bar using the high of this bar. And depending on your backtesting settings, TradeStation would then display a fill if that limit price is touched or traded through. And it will show a negative size in case you're short. With that, using exits is straightforward. You use the exit syntax. In this example, I created an exit tied specifically to an entry named short. And this exit should close out all entries. Should close out all contracts from that entry named short. And you see that after this exit is filled, TradeStation shows a remaining position of 0, indicating we are flat on that chart. Besides reserved words, you can also use variables in orders. And this is an example where before entering a trade, this code uses a for loop to check for the lowest low of the last look back number of bars, and then uses this lowest low as the stop price for the trade. Line 8 here introduces a new reserved word, which is called market position. Market position returns either of 3 values. One, the default value would be 0, meaning you're flat, and +1 means you're long on that chart, -1 means you're short. So it does not return a size. It will just be -1 if you're short, +1 if you're long, or 0 if you're flat. So before we are in a position, we use the for loop to find the lowest low, and then store this in a variable and use that variable as the stop price. And as you can see, before we issued the entry at the end of this bar, we cycled through the last 3 bars in case the lookback is set to 3, and the code found the lowest low in the low of this bar. And you can see once that low gets touched, the stop is filled, and we're flat after that. When working with multiple entries in the same direction. Exits that are tied to a specific entry name are only applied to this entry then, as they would in case you don't scale into a position, of course. But here I'm just using the once reserved word to issue an entry order. I just did this for demonstrational purpose here to make sure that the order only gets issued once. Then a few bars after the entry, I issued another entry order for 3 contracts. So after this is filled, we are short 5 contracts. And after a few additional bars, this statement here issued an exit for all contracts from the first entry. And this leaves us with 3 contracts short after it's filled. You can, of course, scale out or close out an entry partially. As this example shows, I've just specified 1 contract here for the exit. And notice that TradeStation is not sensitive about singular or plural here. You could use 1 contract. I just wrote 1 contract to make it clearer here. So after this exit is filled, we are still net short 4 contracts. And in case you don't tie the exit to an entry specifically, then it would get applied to all currently open entries, as this example shows. You see 2 exits, although we issued only 1, and we are flat after that. If you don't specify the size here or don't use all contracts, then TradeStation would also know to close out the entire position. If we specify a size here, like 1 contract, for example, the default behavior is still that the exit is applied to all entries. So again, we see 2 exits here, and the position is 3 contracts short after each exit was filled for 1 contract. If you don't want this default behavior, you can use the total reserved word. This would exit a total of the specified contracts only. So in this case, of 1 contract, we would just close out 1 contract total and not 1 contract for all entries. In case you specify more contracts than the first entry, then the remaining number of contracts would be closed out from the second entry, and so on. TradeStation does that on a first in, first out basis, meaning the first entry that you took into the position would be the one to get exited first as well. When it comes to strategy automation, it's important to keep in mind that TradeStation will only generate day orders in strategy automation. This means an order that was issued while the automation was enabled will get canceled at the end of the session, and then, depending on your conditions, would get issued again at the beginning of the next session. And in backtesting and real time, orders are kept alive until the next code execution. This means if the order is not issued again by the code, it will then get canceled with the next execution. And you can use this knowledge to your advantage by, for example, canceling unfilled orders after X number of bars, simply by invalidating the condition that issued the order. Or you can also use this to keep orders alive longer, and I'll show you how to do that now. This small code snippet simply issues a buy entry order following a crossover of 2 moving averages. So when the fast one, which is the Kion one here, crosses over the magenta line. The code, which is detected at the end of this bar, the code would then issue a buy entry order using the low of this bar with a limit price. It was not reached on this bar. It was, however, reached on this bar, but using this code, you don't see a fill. The reason you don't see a fill is the crossover condition was only valid on the bar where the actual crossover happened. So one bar later, the crossover condition is no longer there, and therefore the order would get canceled because your code conditions that lead to the order are no longer true. What can you do to keep the order alive? One way to do it is by using a Boolean variable. So at the moment the crossover happens, you set this variable to true, and it can also make sense to store the price that you want to use for the limit order. And then you can use this condition to issue or keep the order alive on subsequent bars. And you can see in this example, the order is still present on the next bar, and we got a fill once the price touched the low of the bar where we initially issued the order. And now you could, for example, set go long back to false after X number of bars. This would then cancel the order, or in the full code, you could track the fill and then reset the flag upon a fill to prevent the order from getting issued again without another crossover. To track specific, or to track things like detect the fill and track other specific metrics, TradeStation provides reserved words for strategy, position, and performances. And those reserved words are only available when working with a strategy, so they won't work in an indicator. And all strategies applied to the same chart would see the same value for these reserved words. So they all strategies would act as one there in terms of those reserved words. And those reserved words are slightly different, or have a slightly different behavior in terms of other reserved words. And one is that you can't historically reference previous sparse values for those reserved words. By historical reference of previous sparse values, I simply mean you can't use square brackets with a number for those reserved words. The trick here is to simply assign the reserved word to a variable and then access previous sparse values of that variable, which will then basically accomplish the same thing. Another difference is that those reserved words allow you to access up to 10 positions ago using parentheses and the number. And on the right here, for the market position reserved word, I show you how you can access the market position of the previous position by using a number 1 in parentheses. And this code snippet shows you how you can reference previous sparse values of those reserved words by assigning them to a variable and then referencing this variable. And such a code snippet like you see on line 9 and 10 could be used to detect fill or catch situations where an entry and exit happened within a bar. On market position is something we covered already. Total trades gives you access to the total number of closed out trades on that chart, where each entry would count as 1. Entry price and exit price provide you with access to the entry and exit price of the first entry in a position. Current shares, or the synonymously used current contracts, provide you with the number of your current position on that chart. Barstein's entry and Barstein's exit should be self-explanatory. Net profit returns the total currency amount of all closed strategy trades, winning and losing. And you have other performance-related reserved words to get the profit of a position or the loss, and the maximum profit and maximum loss of positions. This list is not complete, and you can get a full list of the available reserved words within the development environment. And you can open the development environment either from the start menu of Windows or directly out of TradeStation. In case of TradeStation 10, it's done via File, New Application, and then Easy Language. And in there, you would open the dictionary via View Dictionary, and then you can navigate to the strategy performance and strategy position entries in the easylanguage.ell namespace. And here on the right, you can click on the reserved words and see the online help for each of one. Okay, when you combine what you learned so far in terms of entries and exits, keeping track of performance-related metrics and other strategy-related reserved words, and you use that to design your first strategy, it's important to keep a few things in mind when you evaluate historical performances of a strategy, and especially keep in mind things about the assumptions that TradeStation makes by default regarding how historical bars developed. By default, the platform has access to 4 data points only, which 4 data points per bar only, sorry. Those are the open, the high, the low, and the close, but it's not aware of how we got from the open to the close. So how can TradeStation tell if the high or low was reached first? The answer is, by default, it can't. It will make an assumption. And the assumption here is that whatever is closer to the open was reached first. So if the high is closer to the open, then TradeStation would assume the high was reached first on that bar. If the low is closer to the open or equally close than the high, then TradeStation would assume that the low was reached first. And the second assumption that TradeStation makes by default is that all prices have been traded at during the bar, which, especially in terms of thinly traded markets, is not necessarily the case. What implications can this have for you? When we look at an example, this code, when applied to a daily chart, will issue an entry order for one contract at the end of the 9th of October, which is what this date in Easy Language date format shows you. And then it uses the high and low of the previous bar as a target and a stop price for 2 orders. Apply this code to a daily chart. In this example, this is the YM chart that I applied it to, and TradeStation will show this as a profitable trade. So this will be the 10th of October here. And why does it show a profitable trade here? The reason simply is that the high is closer to the open. TradeStation makes the assumption the high was reached first, so we did go up first, then down, then back up again to close near the high. Looking at the bar and seeing the long down tail, it's at least questionable if the bar developed like TradeStation assumes. you have the ability to improve the accuracy of your testing and provide TradeStation with a finer granularity of data. And this is where a look inside bar backtesting comes into play. This allows you to specify a faster resolution, which will be loaded within the background of TradeStation. This resolution will be faster than your chart time frame. And with that resolution, TradeStation is then able to tell, based on that resolution that you load, how the bars of your chart time frame developed. The most accurate, of course, would be using 1 tick. And if you provide a higher resolution, like 1 minute, for example, TradeStation would then have the ability to say with 1 minute accuracy, again using 4 data points for every, in that case, 1 minute bar, then how the daily bar developed. So by that, it should be clear 1 tick data gives you the most accurate results, and using anything higher than that is it means you're making a trade-off in terms of the accuracy. However, sometimes this is necessary, especially in case you are testing over a longer period, or in case the tick data amount is not available for the long history that you require. Once you enable look inside bar backtesting, and the strategy gets re-evaluated, and now the formerly profitable trade is displayed as a losing trade. And this is especially something to keep in mind in case your strategy can enter or exit trades during a bar, because then you would have to live with those assumptions TradeStation makes, and in this case, the look inside bar backtesting can give you higher accuracy, because one thing you want to avoid when you develop and test your strategies is that the historical results are only good due to assumptions that TradeStation makes. In fact, you want to match the historical results as closely to what would have happened in real time. Another platform setting that can affect your results is the setting for the maximum number of bars your study will reference. Reference in this context refers to the number of bars that are back referenced within the code, and not the total number of bars that the strategy is processed on. So going back to our 10 bars moving average example, we step back through the previous bars and reference each of this previous bar's values. In simple terms, max bars back is the number of bars more than the current bar required to do a calculation. So for our 10 bar simple moving average example, we need 9 bars to the left of the current bar. So consequently, max bars back would have to be at least set to 9. During this set max bars back period, no calculations will take place. So this affects your starting point of the studies. If you set this value very high, this means this many initial number of bars would get skipped for the calculation, so you would not see any calculations on those bars. And besides that, TradeStation requires this max bars back setting or number of bars to be present for all data streams, even in case you work with multiple data streams, of course. Even if only one of those data streams, maybe the fastest one, requires a very high look back, TradeStation would still require that all data streams have to have this many bars present on the chart first before any calculations can start. And by that, it should become clearer that when you have a very high settings, and sometimes you see settings in the tens of thousands that users use, and then wonder why there are no trades within the first, I don't know, month or years of data. If the max parse back is set to low, TradeStation will raise an error message. And this is usually seen with strategies, because for strategies you have to manually set this max parse back value, and by default indicators are set to auto detect max parse back. So it's rarely seen with indicators and more likely to be seen with strategies. And sometimes it might be necessary to use a very high value for the max parse back. For example, in case you compute 100 bar simple moving average, you would consequently have to have at least 99 bars set for the maximum number of bars. But when your code requires very high values, and TradeStation keeps issuing warning messages when you try to go lower, it can make sense to review your code to see if you can accomplish what you're doing slightly different, because there are usually ways to code the same, or to get the same results, maybe with a bit more coding, but with less impact on the max parse back. For example, you can use an array or something like that to keep the last parse values and then compute your moving average from an array. Or a recent example from a forum where after an exit, the poster was trying to find the lowest low after the exit, and he used a perfectly valid approach, which was using the bars since exit reserved word, and this was fed to the lowest function as a length input. The problem here is then that sometimes you can have thousands of bars after an exit, and in this case, this would mean you will need those thousands or whatever bars as a max parse back setting, and you have a variable lookback here because it constantly changes. And this can make it very tricky to find the correct and appropriate max parse back value. And in this example, you can, for example, achieve exactly the same by using a simple variable, storing the low of the bar either at your exit or one after the exit, and then using this variable and updating it every time the bar makes a lower low, then update the variable to the lower low. And with that, you achieve exactly the same, but with basically zero impact on the max bars at all. And this way, the user was able to considerably drop the required number of max parse back from a couple of thousands to, I don't know, probably less than 100. And since the setting affects the starting point of your studies, this is also important to keep in mind, because when dealing with start point dependent calculations, it matters. The first bar where your code is computed can matter. And since indicators and strategies usually use different max parse back setting, it can also result in differences that you see visually on the chart versus what the strategy that should follow the logic of an indicator is doing on the chart is different. And in this example, I applied the built-in exponential moving average with a length of 100 to a daily YM chart. And I didn't change anything, just default inputs other than the length was set to 100. And the strategy trades there are due to the code snippet that you can see on the chart here. It's also using the same code that the exponential moving average uses to compute the exponential average. You see that the price and the length are the same, and when a bar closes above the average and crosses it, then a buy entry is issued, and vice versa for sell entry. The strategy is applied to the same chart. And you can see that at least the first long trades seem to be completely out of place. The first short seems to be correct. The next long is again late. There's another long that is late, 1 bar at least. This long appears to be late. And this is a situation where you might find yourself scratching your head, thinking about what could be wrong here. Why don't the results align or match up? And the reason simply here is that the exponential moving average is in fact start point dependent, because the current bar's value of the exponential moving average contains a reference to the previous bar's exponential moving average value in the calculation. So every bar matches basically for the exponential moving average. And the reason for the differences here is that the indicator having the ability to auto-detect the required max pass back can find a lower requirement for the max pass back automatically. And the strategy uses the default value of 50, thus starting later. And this results in differences in terms of the calculation of values of the moving average. What can you do to get a visual match? You can, for example, load an exponential moving average with the same length, where you specifically set the indicator max pass back values to the same as the strategy uses, and the red line shows that. And now you can see the longs perfectly match up with the crossovers as well. And you can also see that after almost 1.5 years ago, the values of the current bar's exponential moving averages are still not the same, just or only because they started at slightly different points. And this shows you that especially when it comes to strategies, start point dependency can be an important thing to keep in mind. If, for example, you change the max pass back value for a strategy between tests that you do, the internal values then within your strategy might be different. And this would make it much harder for you to compare your results. And it's also an important thing to keep in mind when you try to add indicators to the same chart as the strategy to see and get a visual confirmation to see if the logic is correct. And in that case, it can make sense to use or to set both to the same max pass back value. And for strategies, you do that directly underneath the look inside bar back testing, which you can find on the properties for all strategies general tab. And each indicator has its own max pass back setting, which is allocated on the indicator options, and it's located on the general tab there. And when you aim for the visual checks, then it can make sense to set both to the same values to make sure that what you see is what you get within the strategy as well. Okay, that's it for today, guys. We took a look at elements of control flow in terms of the for loop and the while loop. We learned about strategy trading, how to enter exit trades within TradeStation, and how you can keep track of strategy and performance-related metrics. And we saw how settings can impact the results that you get and what you can do to improve accuracies or to make sure that indicator and strategy calculations on the same chart match. And with that, I'd like to thank you again for attending or watching it on YouTube. And I'd like to turn things back to Terry in case there are any questions. Thank you very much.
Okay, thank you. Let me see. If a strategy has more than one buy order, how to find out if a specific order has executed?
That depends on the context. On the chart, you could, when you use a different name for the order, you would see it. But do you mean in terms of within the strategy, know which entry led to a fill, or which order led to a fill?
I'm not for sure. I'm waiting to see if he replies.
There is the ability to use object-oriented easy language. In that case, for example, you can use what is called a strategy host object. But this becomes a bit more complex then. You can, because this is object-oriented easy language, then goes a bit past this webinar here. But there are ways to get entry names and exit names specifically.
Okay. How to check if an order exists? He's having a problem where a strategy disconnects from the server, and when it connects back, it sends an existing order, resulting in 2 orders being executed and doubling the quantity size.
I think the best approach here would be to do this manually. In fact, when you re-enable the automation, check first if any orders exist, and then probably cancel it manually, because from the strategy level, you probably can't control that, at least not that easily. Again, it will be different with object-oriented easy language in case of order objects, where you can check that. But for regular strategy trading using legacy easy language, I'm not aware of a way to detect that, honestly.
Okay. Is there a way to simply cancel an order in a strategy if a certain condition arises after placing a strategy order?
Yes. Well, this goes back to the example that we went over, that TradeStation will automatically cancel orders when the conditions are no longer true on the next code calculation. So if you design your conditions in a way where you use a flag, for example, to issue the order, then you can set this flag back to false after X bars, or whenever the conditions you desire for canceling the order are met. That would definitely work, yes.
Okay. And he asked, I thought bar since entry was not recommended to use in an active strategy.
I'm not sure why, but in the examples here, I used them just to issue orders here for demonstrational purposes. The goal was mainly to show how the exits would be applied to a specific entry. And I just used bar since exit or bar since entry here to do that. so they spread a bit apart on the chart so you could see them easier.
Yeah, he says TradeStation help suggests that the bar sense entry cannot be used as actionable in a strategy.
Okay, I would need to know the exact context to be able to say more here. Sorry.
Okay. Do arrays dimension require a proportionally higher MBB value?
Not necessarily. That depends. The max bar spec is influenced by the lookback that you, the reference that you do within the code. If you fill your array, or for that matter, a list or dictionary, which is although a bit more advanced because it also gets into object-oriented easy language, it's a lot more advanced compared to arrays. If you fill whatever container you use to store your values bar by bar, then you have virtually no effect on the max bar spec when you cycle through that array or list to obtain the whatever values you stored there.
Okay. Is there a way to check for a late stock open?
By that you mean?
I'm not sure. That's all. It's just all the question says. I'm gonna wait. If you can expand more. Okay, it says NYSE stocks can open late, so I'm assuming on a stock if it doesn't open at the regular time.
You would have to have a way to get this information in within the code. I'm not sure that you can access this within any of the reserved words in TradeStation, but when you can obtain this information from a website or somewhere else, you could then theoretically make this known to your code.
Okay.
Another way that, I mean, you could detect the delay, although not upfront, would be to use your computer's clocks and check if there is no market activity past the open. Although this would make the assumption that that there would have been trades otherwise. So that would not really not be totally reliable, of course.
Okay. Can a strategy be turned on at will after a setup on a 5-minute bar is recognized?
No, the way to do that, or at least the preferred way to do that, would be to maybe only activate the entry logic within your code when the conditions are met, but not to enable the strategy directly.
Okay.
The strategy should run and the automation should be enabled, and then you can code it in a way that it only acts when your conditions are met.
Okay, I think that is all of the questions. Yep. Do you have a contact slide with your contact information?
No, but you can use the contact formula on the contact form on my website, abctradinggroup.com, or you can shoot me a mail at info@abctradinggroup.com, or of course drop me a line on Futures.io, send me a PM there, and yeah.
All right, thank you for the webinar, for the information, and for spending some time with us this evening.
Yeah, my pleasure. Thank you very much, Terry.
Thank you.